Hi everyone, welcome back to the channel. As mentioned in the title today, I will be covering the basics on how to start investing in Canada. I decided to do this first video simply because I believe you guys are gonna greatly benefit from it, as well as better understand future videos. That being said, if you guys could hit the like button, I would greatly appreciate it. Before we jump in, here's a quick overview of what I'll be discussing. 1, what is a broker or brokerage? 2, what are the different investment accounts? 3, how to choose a brokerage properly based on what you want. All right, so let's start with what is a broker. An online broker lets you buy and sell stocks online within your trading account. They're often called online brokerages or discount brokerages because this method of buying and selling stocks is more cost effective than traditional brokerages. Now, how do online brokerages work? So, online brokers operate on the same principle of investing for growth as mutual fund managers and robo advisors. Online brokers offer investment options that are both higher risk and higher return than saving accounts or GICs. These higher returns help you save for retirement over the long period. Where online brokers differ from mutual fund managers and robo advisors is how they deliver that service. Mutual fund salespeople and robo advisors rely on questionnaires and sometimes an in-person meeting to help them determine your ideal asset allocation and then build a portfolio for you from that. It's more DIY with online brokers. Online brokers leave asset allocation and portfolio building to you. Instead of offering oversight and advice, they offer a lower fee environment for you to invest your money. So they don't charge you more fees because they're letting you build your own portfolio and doing your own asset allocation. Online brokers are ideal for investors who follow the couch potato portfolio strategy because it lets them build their ideal portfolios easily with a handful of low-cost ETFs. You can use your online broker as little as 4 times per year to build your portfolio and rebalance your asset allocations. This depends on which brokerage you end up picking. They all have their own pros and cons. Please do your own due diligence. When it comes to getting the most out of your portfolio, the best option is to invest your money yourself, cutting out the middle person and vastly reducing the fees you'll pay over the lifetime of your investments. While using an online broker to invest your money may seem intimidating at first, a simple portfolio built out of ETFs will give you the growth needed to reach a comfortable retirement while keeping you in the driver's seat of your money. So basically, if you're willing to potentially learn how this works and how to build your own portfolio, you will be saving on fees since no one is telling you how to do it or doing it for you. So secondly, what are the different investment accounts that are available to you as a Canadian investor? So there's 2 types. There is the registered accounts and there is the non-registered accounts. So I won't be talking too much about the non-registered accounts. I'll mainly be focusing on the registered accounts since they do offer a lot of advantages, and I believe most of you, like myself, would greatly benefit from starting off with those. So here I just wanted to show you guys exactly what I was talking about, just in case you didn't understand. So registered investment accounts are government registered plans such as the RRSPs, the TFSAs, and the RESPs that I had mentioned. They offer tax advantages that can help your funds grow tax-free until withdrawal, or in the case of a TFSA, it's tax-free for life. Registered investment accounts come with some restrictions, such as what you can invest in and how much. Non-registered investment accounts are a little different. Income earned, so interest, dividends, or capital gains on assets in your non-registered accounts is subject to being taxed on an annual basis. Non-registered accounts are more flexible than registered ones and have no restrictions on the assets you can invest in or how much you can invest, but These can be interesting if you have maxed out your registered accounts, such as your TFSA or RRSP, and want to continue investing, but they aren't the best to start, in my opinion, since they don't offer as much advantages. Although, I mean, they do not have any withdrawal limit or contribution limits. So upon maxing out all your registered accounts that are best for you, then this is a good idea if you want to keep putting money to work. So I'm just going to talk about the difference between the TFSA and the RRSP. So here are some of the major factors that differentiate the two. I myself have both, but I mainly contribute to my TFSA since it fits my financial goals better, but it may be different for you. All right, so how do you pick the best brokerage for your needs? So it's fairly simple. What I do is I would write down these 3 things. So firstly, your goals. Why do you want to start investing? Secondly, for how long of a time span do you want to be invested in the markets for? Is it 5 years? Is it 15? Is it 45? And third, do you want to invest your money with a professional that will build you your portfolio to start off? Or do you prefer giving yourself a shot in building and deciding your asset allocation? Depending on those 3 questions, you'll be able to decide your risk factor, what type of accounts you should be using, what type of portfolio you should go for, and etc. But from those 3 questions, you'd be able to pretty much figure out what type of investor you want to be and how much risk you're willing to take. That wraps up today's video. Let me know down in the comments below if you enjoyed it or found it useful, as well as smashing the like button. Don't forget to subscribe and turn on the bell notification so you don't miss the next one. Finally, I'll be also adding a few things down below, which will be one for the terminology that we talked about today, and some for the content that I used, as well as a few referral links to Wealthsimple and Questrade to open an account and save some money.